years.
Welcome to Talk of the Bay. I'm your host, Rachel Anne Goodman, on this Thursday evening around the Central Coast. And tonight we're going to be talking about something that has plagued California's homeowners for a while. It's called the insurance crisis by some, and most people would not argue there is a crisis. There's a crisis because people living in woodland areas, places with forests, places with trees, are getting canceled right and left. And the major insurance companies have left the state. They have dropped thousands of homeowners and sent them onto the FAIR plan, which is kind of an insurer of last resort. And once there, those rates are going up too. They're not only high already, but they're set to go up further. I am going to be sharing an interview with Michael Soler. He is the Deputy Insurance Commissioner for the state of California. And I'm going to ask him a lot of questions about this situation. In the second half of the program, we'll hear from Consumer Watchdog, one of the main places that has a criticism of the way Ricardo Lara has handled the insurance crisis, and he's calling for him to step down, for Governor Newsom to somehow fire him, although he is an elected official, so that raises some issues right there. We'll be speaking with Justin Klosko in the second half about why they are calling for this drastic change and what it means for homeowners in our area. This is Talk of the Bay. I'm Rachel Anne Goodman, and today we're talking about fire insurance. It's a big topic. I'm sitting here in Bonnie Doon, one of the hardest hit areas for the CZU fire. And I was just talking to a neighbor whose complete property in the whole neighborhood was probably the hardest hit near us. And she says, 2 out of the 70 people that live there have rebuilt. And that kind of tracks the statistics. I'm here speaking with Michael Soler. He is the Deputy Insurance Commissioner up in Sacramento, in charge of a big lift, which is trying to get relief for all these homeowners who have been dropped from their policy and are now on the FAIR plan. And I, just in full disclosure, am one of those. So I have personal experience with the frustration of having my insurance policy go from $2,500 a year to $11,000. So I'm just one of many, many people struggling with this. Lara promised us that by December of this year, we would see some relief. And now there's this big New York Times expose that says, what happened to the 85% promise that was supposed to get us off this wicked, unfair plan? So that's kind of my first question is, what happened?
Yeah, Rachel, first of all, let me just say 2,500 to 11,000, it's unacceptable. But that's what's happening to people all across the state. When you get out of the regular insurance market and you land on the FAIR plan, that's exactly what people are seeing. We've spent a lot of time recently up in Paradise. And the flip side of this is that when people can get off the FAIR plan and back with a regular insurance company, they're seeing their bills go back down. Maybe not to exact that level, but that's what is at stake here in California. That is our goal, is that California should have options, real options, comprehensive coverage outside of the FAIR plan. Because the FAIR plan, you know about it. I think a lot of Californians still don't, but it is limited coverage at a higher price. It's not acceptable. It was meant to be a last resort, but it's the only option for a lot of people. And that's in what our data shows. The data that we shared with the New York Times, and I want to give you some kind of what this looked like from our side, is that we really rolled up our sleeves, worked with the New York Times over a number of months. And the data that they're reporting, their conclusions are their own, their interpretation. But we're working from the same data, and that's really, really important. We shared data showing where the FAIR plan has grown, where people are at higher risk, and that includes the county of Santa Cruz, and it includes counties if you look at California and you know where our fires have been, the areas that we defined as wildfire distress really look like the map of wildfires in California historically.
Let's use that word distressed, because that's one of the things that the New York Times article really called out, which is these insurance companies now are insuring a whole bunch of not very distressed properties in order to show that they're doing this, but and calling them distressed, whereas the rest, I think I heard 2,500 in the whole state have gotten off the FAIR plan. Is that right? It just seems like such a drop in the bucket when you have millions of people stuck in this situation.
Yeah. So the FAIR plan is now approaching 600,000 people. So that's essentially
it doubled
statewide. And that's going to include folks who are there because of wildfire risk, but it also does have some folks who are there in urban areas. It's always been that way. The FAIR plan was set up, in the late 1960s, early 1970s to respond to where insurance companies weren't writing. And that was people at wildfire risk, but it was also areas of inner cities and urban areas that have been redlined by companies. So just that number is inclusive, but it's really grown in what we call distressed areas, meaning areas where more and more people are on the FAIR plan because of wildfires. And what this is a story that is still being written. And what I mean is, right now, where we're at, and Commissioner Lotta talked about the end of this year as a point when we want to start seeing some progress. What we've seen is that 5 companies, including 3 of the largest in the state, have come in to our department. They've said, we are going to stay in the state and we're going to grow in the state. And they've each applied for a rate change. They've each requested rate increases of 6.9% for each of them. That's going to be an average statewide. To put that in perspective, that's the same rate change that past insurance commissioners have approved thousands and thousands of these. The difference is, for the very first time, insurance companies are saying, we are going to stay in the state and we're going to grow. And that's really at the heart of the reforms that we've put into place. We call it the sustainable insurance strategy, because for the past 30 years, insurance companies have raised their rates while non-renewing and dropping customers all across the state. That's what is changing. And, we are not going to declare success before, we're not going to spike the ball on the 20-yard line. That's where we're at, though. And once we finish our review of these rate filings, that's when we're going to start to see companies writing more policies, lifting the limits that they have, and making other changes to get policies flowing again. So that's what I wanted. We're in progress, and I don't.
That's hopeful. It's a long way off for a lot of people, but let me just ask you about this.
It's overdue, Rachel. I think that's another important point to recognize. Yes. When you talk about the EVU fire, that was years ago, but people are still not only recovering, but
not being renewed. Yeah, the same people who lost their homes are not being renewed. So when this was being negotiated before the LA fires, State Farm and all the other biggies, they dropped like hundreds of thousands of ratepayers who had insurance right before that. This was in advance of the reforms going into effect. I thought there was some sort of deal struck, and did the insurance companies go back on that deal when they said, and this is the other thing, they were supposed to add 5% like first, but they dropped 5% of the customers. So adding them back in is like grandfathering in non-renewals, according to the New York Times article I read. It sounded like, that sounds good, but they're really just insuring the people they dropped. So are we just still at zero now of growth in these renewals?
No, that's a great question. There are a lot of numbers flying around. I think for us, we set a benchmark. We drew a line at the end of 2023. So that's where companies are at the end of 2023, and that was when Commissioner Lotta announced the regulation, announced these series of regulations. So that's the benchmark that we're judging companies by. So if companies drop policies following that, and you mentioned State Farm, they dropped 70,000 policies, started doing that Short after that, in starting in 2024, even before the LA wildfires. They're held accountable under our formula. If companies are dropping policies, they're going to have to make those policies up. And in order to keep using these new regulations, this is an important point. It's not just a one-time fix. It's not just write a few more policies and you're good. We expect companies to keep growing in the state. And this was something I told the New York Times. It doesn't help anyone if companies grow so fast that they get into trouble. And when I say trouble, I mean, I'm talking about financial solvency issues that our department also is charged with making sure that we regulate. The companies have the capital to be able to pay future claims. Because you said it, the LA wildfires, we didn't expect to have the most expensive wildfires in our state's history a week after we finished this regulation. But I'll tell you one thing. Without this regulation, we would be in a very different situation today. We've seen after the Tubbs fire in 2017, in 2018 with the Camp Fire, even the CZU fire, after these massive fires, insurance companies pull back even further. So we're not seeing some of the same extreme, we're not seeing the market in chaos at a new level. It's in the same level. And I want to be real about this. This is an insurance crisis unlike one we've ever seen. You'd have to go back to the early 1990s to a situation then under then Commissioner Garamendi, when after the Northridge earthquake and wildfires in, wait for it, there were wildfires in Altadena and Malibu, same years, insurance companies retracted to the point where 92% of insurance companies had stopped writing in the state. We are not at that level. We don't want to be at that level. That's why we are moving quickly and why we're going to hold these companies accountable to writing more policies. But it can't be just overnight. And I know that's hard. That's cold comfort to folks who really need the coverage now. But we expect to see more policies being written starting as soon as we're finished with our work reviewing these filings.
Is there any teeth to the promise that you were going to take people out of the FAIR Plan first?
Absolutely. So I think that first of all, we developed a map. You can go to insurance.ca.gov and you can look at the map. And we developed it. We used a data-driven approach. The very first filter, let's call it that, we used is we looked at zip codes where 15% or more of people were on the FAIR Plan. And that's the first target. So those zip codes are included. Then we broadened it out to counties because we realized we need to have a big enough pool so that we can move the needle. We really need to move, we're at 600,000 policies in the FAIR Plan. So we need to get people out. So we did broadened it to counties that have 20% or greater wildfire risk. I know these sound like a lot of numbers, but that's how we recognize that there are counties that might have some urban areas where maybe many more people have coverage, but they have also these real rural areas. Santa Cruz is a great example of that. Obviously there's folks right along the coast who likely aren't on the FAIR Plan.
But let's talk about the FAIR Plan a little bit more, because I read that our rates at the FAIR Plan are going up 36%. It's already astronomical for very little coverage. So why did that happen? And is there any relief? I know it's not universal, that's an average, but that means some people are getting 50% increases, right?
Thank you. That's exactly what that means. When you look at an average, it means that some people might be paying a lot more. Some people may be paying less. That's an average. Just to be clear, the FAIR Plan has applied for this. They're an insurance company like other insurance companies. They're not a state-run program. They have to come in and apply for their rates. And so we haven't reviewed that yet. We're going to be looking at their data. One thing, though, that I was really struck by, they actually compared what that rate increase would look like under the new rules and under the old rules. Under the new rules, They're seeking a 36% increase. Under the old rules, the ones that are now been replaced and upgraded, it would have been an 80% increase.
I think
That's
we should be so thankful. But I'm sorry, a
no,
little
it's
bit
not. And I think,
jaundiced here about this, but
no,
let
no,
me just
Rachel,
paint a picture of what could also happen,
yeah,
which I don't know if anybody's models have modeled, but some of the people like from the NAACP in LA were talking about this. There's a lot of people who can't afford a 36% or even just currently the $10,000 a year, and they're going to start going uninsured, which is going to further degrade the real estate market in California, which is the underpinning of a lot of the wealth here. Let's face it. So, how have we calculated the impact of these rate increases on the overall real estate market?
no, Rachel, let's agree, 36%, 80%. If you it, it's an unbelievable number. I just wanted to give you that context because I think that it's important when folks are saying, "Oh, well, this is just a path to rates increasing and increasing." Using models, it's only going up. In fact, with the one example that we've seen the way in which it might lead to more sustainable, more moderate. 36%? No, we've got to get people out of the FAIR plan. And so that's the priority, again, for us, is making sure that insurance companies are writing those policies, taking them out of the FAIR plan. And that's where the teeth here are, we can go and look at their rate increases. If they aren't doing what they said they were going to do, we could take that back. We can do a market conduct exam. We can investigate them. And ultimately we can stop them from using models if they're going to abuse the system. So I think that's the tools that we have. But yeah, your point about people going uninsured, that is the doomsday scenario.
And it's what happens in places we think are far away, like, Pahoa, Hawaii, where there's probably going to be a flow of lava coming through. And so they just don't insure their houses because they can replace them at a cheaper rate than they could insure them. And plus, no one wants to insure those houses. I can't imagine California ending up there, but we couldn't imagine a lot of things about climate change that are now happening. So
I've heard that from people, even folks on your side, right? Reporters who say, "Well, I'll just walk away." I just don't think like we don't want a situation where people just throw up their hands and say, "No, it's uninsurable." Because I think, and this actually is something that I wanted to talk to you about because it's something that comes up when we're also talking about the rebuilding in Los Angeles. There is a way to, and I've actually met folks from Santa Cruz who are saying the exact same thing. We want to rebuild safer. We want to rebuild better, and we want our insurance companies to recognize that. And prior to, I started in this job in 2019.
Good timing.
Yeah, right. No, but we knew that this was going to be the major challenge. And one of the very first things we did was we set up a new insurance discount program. It's the first ever. It's called Safer from Wildfires, but we worked with CAL FIRE and Cal OES to try to get everybody on the same page, including the insurance companies, to say, well, what's actually going to make a difference that's achievable for people? I mean, you can build a concrete bunker, but that's not, achievable. That's really not, what can you do with the money you have? And so I don't know if if there's something you all talk about as neighbors. There's so many folks who are joining Firewise USA communities to spread the word about what can we do. And we just passed Commissioner Lara just sponsored legislation setting up what we call the California Safe Homes Act. And we're going to be implementing a grant program starting this year.
We saw that you get help building a roof that's fire resistant and other helps because, as you said, most people can't afford to shave the forest, nor do we want them to like all around their entire property. So there are things that work. One of the things that I was quite surprised by, and this is just one anecdote, but I think it's typical. My neighbor, was bragging about getting reinsured by an insurance company. And I asked, "Do you mind if I ask you how much?" And it was back what we were paying. And she's like right next door and has pretty much the same amount of trees. So it's like, what is it that they're looking at that I'm not seeing? And so we don't get to know, if what we're doing is going to lower our rates. There's all this confusion around clearing and 5 feet of defensible space. We talk about it a lot, and there's varying perspectives. But one of the things that I keep reading is in our local Highlander, which is the Rural Bonnie Doon Association paper, that it doesn't really matter if you clear wildly around your home because they don't look at individual properties anymore. So I don't know if we should be doing anything because they aren't going to reward us as far as money goes. We might get to sleep better at night, but.
Well, and that counts. That's important.
Sure.
But I think that getting under this regulation that we passed now a couple of years ago, Safer from Wildfires, you can actually ask your company, you have a right to ask your insurance company what they're using to evaluate the risk on your property and what discount would they give you for doing different things. So that's in place right now. The problem for me,
it's a very small discount. I've done it. We went through every little step and they're like, yeah, it might save you $100. Like, where's the incentive in that?
Exactly what we've seen. And there was actually just a report from the Environmental Defense Fund that I can share with you, came out last week. And it shows the same thing we're seeing, that discounts generally are from 4% on the low end to 40% on the high end. The biggest factor in whether you're on the low or the high end is your level of risk. So if you're at a much higher level of risk, you can get a higher discount. We have to, this is not going to be the only solution. It has to be supported by grant funds. It has to be supported by, the local actions, like joining a Firewise USA community. I don't know if you're familiar with it. There's great information. CAL FIRE administers that program here.
We have quite a few here in Bonnie Doon. Yeah. So if you just joined me, I'm speaking with Michael Soller. He's the Deputy Insurance Commissioner for California. And recently as November 6th, survivors of the Eaton and Palisades fire were calling on Gavin Newsom to recall your boss, or however you do it with elected official, Ricardo Lara, who they say let people down and privately struck a deal with insurers, allowing them to drop all these policyholders before the LA fire. So I'll let you defend him if you like from that statement, but many people piled on this press release put out by the folks at Consumer. Yeah,
no, absolutely. I think that the LA wildfires are there. We've had massive fires. It's unprecedented in what's happened across such a wide urban area. Some of the issues there that we're confronting, like smoke damage, are issues that are decades-long issues, but now they're at another level because of the devastation. So I just want to say we really recognize the frustration, the anger. We've been meeting with tens of thousands of folks, so trying to help them in the moment, help them with their immediate insurance claim issue, and also strengthen the protections that are in place. So I completely understand, hear where they're coming from. There was a 5-point plan that group put out. We are doing 4 of the things that are on their list. The 5th is a really good idea. We're going to look at it.
What's the 5th one?
Getting more access to the complaint information. We do that annually right now. So the complaint information about insurance, we're doing that on an annual basis. That's a good idea. That's worth looking at some more. But I think in terms of what they're calling for, what Commissioner Lara has said is absolutely, I'm in this job, I'm accountable, and I am going to fix it. We have 30 years of outdated regulations that are compounding the problem. And what he said actually in response is, I will not accept another 30 years of outdated regulations. So, that's what he is. He's really looking at how do we solve the problems there in Los Angeles so that we can also improve things for people in other places. All I'd say to Consumer Watchdog is, you were there. You were there. You were involved in the department for 30 years. What have you done? What have you done to move safety forward? What have you done to make insurance more available? I encourage you to ask them. I think that's really, again, I want to separate these two because I think it's important that we, the recovery is really our top priority here.
Yeah. Well, I did have another question that my husband especially pressed me to ask you, so I want to ask it. The regulations that the voters passed to keep rates low seems set in stone, and that's why these insurance companies are asking just under the amount, that would trigger a public hearing. Is there any way that those regulations can be modified to the point where the insurance companies feel like, they're getting a fair deal, but we're still getting insured? I know that it's a balancing act, but it feels like maybe that is another part of the problem.
Commissioner Lada has talked about this as a balancing in terms of balancing the needs of consumers for policies and, companies having the wherewithal to be able to pay future claims. I think that is embedded in Prop 103. You're talking about the law that voters passed. And I would say Prop 103 wasn't designed to keep rates low. What it was designed that rates could increase by whatever amount was justified. And that's the language in the law, justified by the data in order to pay future claims. That is not enough. It's not enough for rates just to increase, because what we've seen is rates have increased, but insurance companies have dropped policies. So the regulatory changes we've made don't change the structure of Prop 103. But they put in place now an expectation and a requirement that insurance companies, if they're going to increase their rates, they're going to also need to stay and grow in the state. And I think that's something people think of insurance companies like utilities, where they're supposed to offer coverage. They're required actually by law to offer coverage. They're not. And that's not the structure under Prop 103. And so I don't know if that answers your husband's question, but I think, but I would say he's right in the sense that there's a balancing act that needs to happen, but there's also a commitment that needs to happen from insurance companies, not just to walk away from policyholders they've had for decades.
That would be nice. We didn't feel much of a sense of thank you for the loyalty we gave the one company that was insuring us for almost 30 years. There was nothing except a little letter that we got goodbye. So it felt like that loyalty mattered zero. And we had the same house, that they had insured for 29 years. Nothing had changed except for the climate. And you could argue that, as wildfires get more intense, the risk is greater. And I'm sure insurance companies have made that claim without being so wrong. But at the same time, do they really just want everyone to vacate the entire urban interface, wildland urban interface, and send it back to the deer? I mean, part of me wants that, but then again, here I am in my house, so we can't just have it go away. So what do we do?
Well, and I think that's where insurance companies, maybe they're right in the big picture that risk is going up, but where they've been really wrong is in not helping policyholders and not rewarding policyholders when they're doing the right things. And so, we want insurance companies to be doing the insurance discounts, but also taking additional steps. We have one insurance company who has said they will write policies. They'll renew policies for 3 years for homes that meet the IBHS wildfire prepared home standard.
What's the name of the company, by the way?
It's CSAA is the company. It's one of the major Northern California writers. That standard includes a lot of the elements in Safer from Wildfires. But again, we have to recognize that it takes money to make these changes. So it's an important statement, I think, of values and where we need to go as a state is that we need more companies saying, yeah, we'll write you, not just for 1 year, but we will continue to write you because that is the incentive. So that's, again, things that we are starting to see companies do. We can't require them to do that kind of multi-year commitment, but I think that would be, this is not a hopeless situation, is where I'd like, I'd want to leave this with folks. And we really expect to see companies coming back, writing more policies, starting in the months ahead. And hopefully we can come back and talk some more, and maybe some more of your neighbors have gotten insurance. Maybe you've gotten all of their plan.
I would love that. I would be very happy to share what I know about my own community as a data point of many communities that are going through the same thing. And I appreciate you taking the time. I've been speaking with Deputy Insurance Commissioner Michael Solar, and we've been talking about the situation with the regulations around fire insurance that so many of us here in Santa Cruz and Monterey counties have been struggling with. So I will take you up on coming back. Thank you for taking the time.
Thank you.
All right. Yes, you didn't know he played bluegrass banjo, did you? That was Michael Solar. He's Deputy Insurance Commissioner. And we're going to hear next from Justin Klosko. He is with Consumer Watchdog, one of Ricardo Lara's greatest critics, and they have their own plan they're promoting. We're going to hear from them in just a moment after this brief message, so stay tuned.
KSQD thanks Edible Monterey Bay Magazine for supporting this program. Edible Monterey Bay Magazine delivers the story on local food and drink across the region through its quarterly magazine and weekly newsletter. The fall issue is available now. Readers can sign up for the weekly newsletter at ediblemontereybay.com.
Have you ever asked yourself, what does being healthy mean really? Is it the absence of disease or a state of optimal function? How can I decide which treatment to choose when presented with a variety of options? How do I maximize my healthy lifespan? You can get answers to these questions and more at Ask Dr. Dawn here on KSQD every Thursday night at 6 p.m.
That's right, coming up right after this. Well, Justin Klosko is with us for a different perspective. I assume you were listening to the entire interview and have some reaction. You have called for Governor Newsom to fire Ricardo Lara, the insurance commissioner. I don't know that he has the power to do that since Lara is elected, but you have some criticisms, and I would like to ask you for your first impressions of that interview.
Yeah, well, thanks for having me on. Well, first, I'd like to address something the deputy commissioner said, which was, what has Consumer Watchdog done? Well, one of the things we did is we spurred the passage of Prop 103 and basically gave Michael Solar a job, but he doesn't seem to be doing his job because around 50,000 people, even more according to the deputy commissioner, have been dropped since these regulations have been passed. So I think it's important to start there. And as for Commissioner Lara, we're asking for Governor Newsom. He can't just remove him, but Governor Newsom, we're asking Governor Newsom to call for the commissioner to step down so he could put somebody in there who will do the job on behalf of the people of California and policyholders.
Now, he has not been on the job very long. Is it asking a lot for someone to fix a very complicated and incredibly a moving target situation where you had massive wildfires taking out very expensive homes in Los Angeles? So I don't know how long he's been there, but it feels like he just got in like a couple years ago.
Yeah, I think it was right before COVID. Yeah, it's a tough job. It is extremely difficult out there right now. But he wanted this job. So now you got to get to work. And, I know the deputy commissioner said it's not overnight that there's going to be progress, but it has literally been 2 years. And like we all have acknowledged and we have accepted that tens of thousands of policyholders have been dropped since these regulations have been put into place. And it's just kind of unfortunate that, it seems like there's this culture of helplessness with regard to politicians in California, especially at the insurance department, where they know they have power. They are reminded that they have power. This is what the job is about, but they are not exercising that power. And politics is about exercising that power. And the commissioner is empowered by Prop 103, by the voters, to rein in insurance companies to make sure there are reasonable rate increases and that people aren't getting dropped or getting premiums in the mail where premiums are being doubled. I can go down a list of people that we have been talking to, that I have been talking to just in the past year about the rabbit holes that they have fallen into after a tragedy like losing their homes. They then have to literally pick up the pieces and then fight a second battle with companies that are supposed to have their backs. Insurance is like an unspoken power in American society. Nobody likes insurance, and something has to be done about it. I know it's a difficult job, but a stance has to be taken and power has to be exercised.
Well, I'm going to read what Michael Soller sent me after the interview, and he it kind of clarifies what he meant when he said, what have you done in 30 years to make insurance more available? He asked me to ask you on his behalf, this is just me translating, what legislation making insurance more available have this group, Consumer Watchdog, sponsored that has gotten a vote in the legislature or by the people of California between 1988 and today? What regulatory change have they supported and helped to enact? Not what the press release says, but actual policy that you've supported.
Well, Governor Newsom just signed a law that was sponsored by Senator Dave Cortese to institute a public model, a public wildfire model. And this would be incredibly helpful. This should be incredibly helpful to policyholders out there, because right now, and this is something we explore in this new podcast series that we have been rolling out, and that is sort of the invisible forces, the forces of technology and catastrophic risk models that are shaping unionized insurance policies. And these are black box models, and they are hidden because the Department of Insurance is not forcing insurance companies to be transparent and to try to understand why certain homes are, designated high-risk areas, how that conclusion is made. And so since we can't crack the black box, Senator Cortese's bill will kind of create a parallel sort of structure, pool of data, so people can try and understand, well, why is my, fire risk score this high, or why is my premium being hiked? So that's one piece of legislation.
Let me ask you a little bit about that, because I have a question. If the public has one set of data that it can see in order to understand why they got dropped and your neighbor didn't, but the insurance companies are using the black box model, doesn't that still put the consumer at a huge disadvantage because they don't know how the decision is being made?
Yes, certainly. But it does provide context, and it does kind of give insight into where things could be going, when ultimately, the power rests with the insurance commissioner and the power they choose to exercise with regard to these black box models. The question should really be geared towards the department and what they're doing, because it just seems like they're giving insurance companies everything they want, and it's not really looking good out there. And the commissioner likes to say that, or the deputy commissioner said that they cooperated with the New York Times, and oh wow, very interesting, thank you so much. But it seems like a lot of this data that the New York Times story got was from regulatory filings and public filings. So I really, wonder how much cooperation there really was from the Department of Insurance and how much they really welcomed this investigation.
Well, I would ask, and I've heard of what regulatory capture, where the regulators somehow become more sympathetic to the people they're regulating than consumers. But in this case, what would be in it for Laura to give away the store? Like, what are they getting out of it, if anything?
Yeah, that's a good question. I don't know. I can only, speculate. And I think that if you are, a politician on the rise, and this isn't going to be your last job, you're probably going to apply for another job down the line. You don't want to be the person who was in office when a State Farm or a big insurance company leaves the state of California. Governor Newsom doesn't want that. I'm guessing Commissioner Latta doesn't want that either. So they don't want them to leave. They want them to be there, and they're willing to give them, pretty much whatever they ask for.
Well, it sounds like they have more power, the insurance companies, than the governments that are supposed to be helping us. I did have this in the same email from Michael Soller. He said that they have gone after legally the FAIR Plan, which was denying smoke claims and was underpaying these policies. I don't know where that's going, but it was in July that they filed legal action against the FAIR Plan, which is comprised, of a bunch of different insurance companies. They pay into it, right?
Yeah, regarding the FAIR Plan, that it's not really great. You basically are paying a higher premium and you have less coverage. And this whole issue of smoke damage has been a major issue this year. It's almost a more sort of devastating or more annoying process to go through as a policyholder because it's sort of this ambiguous area. But one of the things we explored was this issue of smoke damage and how the state is basically trying to develop new standards for smoke damage and what is or is not considered, smoke damage or how things should be cleaned. And that's a whole other issue that, we can get into more if you want, but we explored that in our series and how there's a task force that the commissioner appointed, and the task force is just stacked with industry people, corporate consultants, and people who you would think are independent, but they work mostly for insurance companies.
One of the biggest complaints that people I know have against the process of once you unfortunately have lost your home is that you have to fight for what you've already paid for. Essentially, you've been paying on your policy for years, or you're on the FAIR Plan. And when you file a claim, it's like their job to try to deny you everything they can. It's your job to try to get what you're supposed to have on paper, right? It feels like that wasn't the deal on the paper that you signed. Is that something you guys are noticing that's continuing to happen, even with people on the FAIR Plan?
Yeah, it's just like a total, policyholders are experiencing, cognitive dissonance with their plans. And even when you get into the weeds and you read the language where, smoke damage should be clean, testing should occur, it should be paid for, and people are having to, fight and on the phone and emailing for months before they get things paid for, and that's if they're lucky. And to kind of widen the picture, like you were alluding to, like it's ridiculous because you're also like required to have insurance if you want a mortgage, right? I think that's how.
Yes, you have to. You're required, and this is where. This is a much bigger issue than just the people who live in the forest getting their policies canceled. Yeah. It means that the whole real estate thing could go down because anyone who wants to move can't move because they can't sell their home. And I remember reading it was 25% of all California homes are in the area that's becoming supposedly uninsurable. So you can't just lose 25% of people off of these real estate deals. That's their whole wealth is in their house. So there's people who can't afford insurance even at it's this high level that it is, and they're talking about maybe having to sell their homes at a loss and move away from the forested areas like Boulder Creek, Bonnie Doon, San Lorenzo Valley in general, because they bought their homes years ago when it was relatively cheap to insure them, and now it isn't. So I just wonder your thoughts on the danger of this problem, which seems to not be solved within the next year anyway, of lowering. Maybe people will be cheering that price homes are going down, but not the people who have their entire future wrapped up in their home. Your thoughts?
Yeah, it's all connected. The real estate market, the climate crisis we're in, and it is a very difficult situation. But I mean, I think ultimately is who has the power, and the insurance commissioner has the power. Like I said before, to make these catastrophic risk models more transparent, and to kind of hold insurance companies way more accountable. And the deputy commissioner was kind of saying, if the story is still being written, well, if this story is still being written, then get rid of those loopholes and write a good ending to this story. Because I'm personally kind of curious, like, did the insurance commissioner kind of know what was going to happen, or did he not know? Either answer is like not a good one. It still happened, and we have this kind of opaque process for insurance rate hikes and how premiums are determined. So yeah, it's just kind of troubling, and so we just asked for some more awareness at the insurance department.
Well, he did send me some other links about this, one of which is that they are investigating State Farm, and they are freezing rate hikes until the survivors are made whole by, and a judge has already ruled on this in May, I guess, and they're also investigating their handling of the wildfire claims. So that's in May and June. I don't know what the outcome of those legal actions, though, are, but it seems like they are taking them to task legally. It's not like they're just sitting around twiddling their thumbs, as you're implying that they're doing nothing. So what are they doing, and what are you guys doing? I know it's a job of a consumer watchdog to point out the problems, but what can you do to solve them is the other question I would ask.
Well, it's a collective effort, and I'll just say that in like the last 2 years alone, I think when Consumer Watchdog intervened, our organization intervenes at the insurance commission when a company wants to request a raise, a rate to be raised. So I think it's something like if like the final result was like an average of like 38% lower for home insurance, and maybe like 29% lower for auto insurance than what insurers requested. But when we didn't intervene, the approved rate was only 2 or 3% less than insurance companies requested. So I think our presence is an important one, and we've saved people billions of dollars since Prop 103 was passed about 35 years ago, and we also talk to people. I mean, this might seem kind of obvious, but like we talk to policyholders. We are in touch with people who get dropped, and we are on the ground and platforming these issues and trying to amplify them. People can never get through to the insurance commissioner. It seems like whenever they try to, ChatGPT responds, or it's a black hole, or it's just a basic email response that everyone would get. And so it just feels like there's a massive disconnect between the suffering and the trauma that's going on and the leaders at the top.
I wanted to read you also another quote from Michael Soller, the Deputy Insurance Commissioner. He says, to your problem of people not getting through, wanting to make the complaint process transparent, he writes, the department currently posts insurer-specific complaint information annually and are considering what other actions they can take to build trust and awareness in the complaint investigation process. But you're saying you can't start the process if you can't get through. Is that correct? Is that your...
Yeah, it's like, I mean, you know how it is. Customer service this day and age is just incredibly absurd and frustrating, and it just feels like the Department of Insurance in California is no different. You can't get any answers or any insight, so yeah, and it's. I don't want to seem too doomsday and too negative. The good things happen there. They're trying. For instance, you can go online and type in your address and to see if you're even covered, and the Department of Insurance will get in touch with your insurer and have them pass along your policy information. So it's sort of like an insurance locator. We think that's super helpful. It might be small, but you'd be surprised out there. A lot of people, when something happens and they have to deal with insurance, they don't even know who insures them or what step one is.
Yeah.
So
yeah,
they are trying to do stuff, and but we also have a job, and that is to sound the alarm and really try to level the playing field for policyholders, for people against these large insurance companies.
Well, let me go back to this idea of the rates, because when I was talking to Michael Solar earlier, we talked about how these companies had been just jacking up rates, but the coverage was going down at the same time. So you're getting less for more money. And what I am curious about is, I know that there's this 7% raise floor or ceiling that if the insurance companies ask to raise rates, they have to stay under 7% or it goes to a public hearing. So they're likely to only request that. But a lot of people, including myself, who are on the FAIR plan and don't tell the insurance companies this, would be so happy if they had to pay half of what they were paying on the FAIR plan, because it is so astronomical and about to go up. But 36% average, it could go up 80% for some people. It could be 30, 40,000 a year. And a lot of people can't afford that. So I guess what I'm asking is, if you hold down rates too much, the insurance companies just, leave the state. That's their game. And the rest of us are stuck in this FAIR plan. So if you overregulate them, not that I want to deregulate anything, but doesn't it cause this problem of they can't make enough money, so they just walk away and drop you? And there you go. 600,000 people are on the FAIR plan now. That's double what it was a year ago.
Yeah. Well, unfortunately, there is greed, and insurance company profits have actually been going up. So they are just protecting their bottom lines. And, I've talked to people whose, rates have gone up to 15K. I've talked to people who one couple was going to get dropped. And the letter said, if you just add a shingle to your roof, we'll keep you. This couple spent like $8,000 fixing their roof, sent in all the photos. The letter still came and said, sorry, we're dropping you. It's just like a mess out there. It's a mess.
I can vouch for that. I'm in the mess myself. So for full disclosure,
sorry about that.
I'm talking from personal experience. Our insurance rates quadrupled overnight.
Oh, wow.
And we were dropped, the week before the CZU fire happened, and we thankfully still had coverage by the end of the month when everything, was ash. And we filed claims, and it was a long process. So a lot of people I know just walked away. They just sold their burned property because they couldn't face fighting with an insurance company to rebuild. A lot of people are still in that boat, trying to figure out what to do after 5 years. So, yeah, it's bad, and I feel for the people in Los Angeles and Altadena and places like that are trying to figure it out. And it just feels like the insurance companies and the government need to find some way that if there is a sweet spot, and I don't know what that is for insurance companies and how much profit they insist on making, but at some point they are in the business of insuring people. Don't you think smaller companies will come in and say, I'll insure you, because even at half of the fair price, the fair plan price, I would still make a ton of money?
That's the thing. Like you said, small insurance companies. It's like
is
that's
there
why
one?
that. I know, right? let us know out there. That's why that 5% rule in the regulations that we've been talking about, that was made for smaller companies to try to incrementally get there to write more policies. But the big companies took advantage of that, and that's what you're seeing. The loophole that they just have to grow 5% from the previous year. So what we're really talking about is we're not talking about overregulation. We're just asking for fairness and for just capitalism. Right now, it's just like a mutant form of it, and it's really gotten out of control.
And we're sitting here talking about homeowners insurance, which feels almost like a luxury compared to the people who are looking at their health insurance bill on the ACA and how that's like quadrupling through the roof. It's not even just home insurance, it's the whole shebang.
That's true. That's true.
Well, it'll be interesting to see what happens in the future. In the next couple of minutes we have left, what would you like, what is the ideal situation here? Obviously, we have to pay something to be insured, but what do you think ought to happen besides you're calling for the head of the insurance company to be lopped off, symbolically, of course, but...
Yeah, I think what we want is just at least step one, some transparency. How are properties being deemed, high fire risk? Why are these rates being raised? How are they being justified? It just seems like there's a lot of unknown variables, and that's what we're asked for. It's just sunshine, as they say, is the ultimate disinfectant.
If people want to read a lot more about this and the loopholes, there's a New York Times article that just came out, I think it was last week, that really focused in on this issue from a number of angles that probably the average person wouldn't have had the resources to dig into through FOIA requests. They got a lot of information, and it's worth a read for anyone who owns a home, whether or not you're in the wildland-urban interface. It is worth a read. And Justin Klosko has been my guest. Thank you for being here with us. Probably call on you again if there's new news about the insurance situation in California. But I appreciate you taking the time to talk to us and our listeners.
Thank you, Rachel. Thanks for having me.
All right. Have a good evening.
You too. Bye-bye.
That was Justin Klosko. He is with Consumer Watchdog, one of the groups trying to reform the insurance crisis from a different perspective, from the consumer's perspective. And if you missed any of that interview, you are welcome to go on ksqd.org. We'll have it up by tomorrow as a podcast. This is Talk of the Bay. We're here every Thursday, and actually Talk of the Bay is here every weekday at 5 o'clock, following just right after the Tom Hartman Show. I'm Rachel Anne Goodman. Coming up in a few minutes, right after First Person Singular, it's time for Ask Dr. Don, so you can ask Dr. Don. I'm Rachel Anne Goodman. Have a great evening. We'll talk to you soon. This is K-Squid, KSQD Santa Cruz, KSQT Prunedale.